After AI helped Microsoft and Meta have major earnings beats, Apple looked maybe a little flat-footed in that area. However, the question remains, can they acquire their way to AI success? Welcome back to the AI Daily Brief Headlines Edition, all the daily AI news you need in around 5 minutes. We have a very deal-oriented headlines today, kicking off with Apple, who were the latest big tech company to do their quarterly earnings. TLDR on this one is that while the company is seeing a big rebound in iPhone sales, their failure on AI is absolutely weighing them down. Big tech earnings have been telling a very clear story around AI. The companies that are betting big, like Microsoft and Meta, have seen blowout results and massive increases in their stock prices. Indeed, despite the fact that some analysts remain concerned on this CapEx spending, as the Wall Street Journal put it, big tech's $400 billion AI spending spree just got Wall Street's blessing. The sort of results that Microsoft and Meta are putting up are, in other words, justifying, even in the short term, those costs to Wall Street investors. And then there's Apple. Strange Apple. On the one hand, the numbers were actually strong. iPhone sales were up 14% to reach $44.6 billion for the quarter, which was 10% above analyst forecasts. Top-line revenue was up 9.6%, which wasn't nearly as impressive as the cloud giants, but far from a disaster. Guidance was also strong, with Apple predicting revenue growth in the mid to high single digits for the next quarter, which is well above the previous 3% analyst forecast. Overall, this was Apple's strongest quarter of revenue growth since December 2021. In any other era, this would have been a blowout quarter that defied negative views from analysts, but the market only gave Apple a 2% boost in after-hours trading. And honestly, if you had to have one takeaway from mega cap tech earnings this week, it's that the market does not care how many iPhones you ship, only how many AI tokens you're serving. Apple is now squarely in catch-up mode and did, in fact, articulate something of a plan to investors. During the earnings call, CEO Tim Cook said, "We see AI as one of the most profound technologies of our lifetime. We are embedding it across our devices and platforms and across the company. We are also significantly growing our investments. Apple has always been about taking the most advanced technologies and making them easy to use and accessible for everyone, and that's at the heart of our AI strategy." Now, of course, this is what we all thought made sense last year when they announced Apple Intelligence, but their ability to deliver on that idea has been woefully lacking. Cook did go on to say that they were, quote, reallocating a fair number of people to focus on AI features, and that they have a, quote, great team and we're putting all of our energy behind it. A CNBC interview ahead of earnings had focused on mergers and acquisitions as Apple's potential AI solution. Cook said that Apple would significantly grow and is, quote, open to M&A that accelerates our roadmap. He touted 7 acquisitions made so far this year, but also acknowledged that none of them were huge in terms of a dollar amount. Later on the earnings call, Apple also said that they were currently making acquisitions at the rate of one every several weeks. So clearly they are leaning into this narrative that maybe they can buy their way out of this. Now, if that is the strategy that they approach, it will represent a big shift for Apple, which has historically been reluctant to acquire their way to success. For many observers, including me, it's felt like this was their only path. Back as Apple Intelligence really started to sputter painfully between Q1 and Q2, I and many others suggested that Apple should go out and try to buy one of the foundation model companies, Mistral, Perplexity, or my top choice at the time, Anthropic. However, since then, the problem is that if that is the strategy they want to pursue, valuations are now running away from Apple. Anthropic was already a stretch in March, but with its valuation rumored to have reached $170 billion, it's now basically unobtainable. Even Mistral and Perplexity have moved from single-digit billions to the mid-teens. What's more, it'd be surprising if any of the leading AI startups are even really open to an acquisition partner. I don't want to overstate that case, you never know what's going on behind the scenes, but the point is that the longer that Apple waits, the harder it gets. The people who watch Apple most closely just aren't buying this. Bloomberg's Apple watcher Mark Gurman writes, "To be sure, Cook has said several times that Apple is unafraid of big deals, and they've still never done one. While I do think AI changes that, Apple's pace of M&A has only slowed down dramatically in recent years, and his comments today aren't a new line of thinking." Frankly, to me, it sounds kind of like Tim Cook is trying to ride it out for a few years. Honestly, he kind of reminds me of Jay Powell at FOMC pressers when he does nothing and says we're just going to have to wait and see. When an analyst asked Cook whether he thinks AI models will become commoditized, Cook declined to answer, adding, "That gives away some things on our strategy." But honestly, even if they are playing a wait-and-see strategy or they have some conviction around when things get commoditized, they are paying real costs in the meantime. Peter Anderson of Anderson Capital Management said, "Apple's embarrassing AI shows how it has lost its mojo with innovation. And the lack of innovation speaks to the lack of revenue growth, and that speaks to why we don't see upside in the stock. Says Glenview Trust Chief Investment Officer Bill Stone, it's hard to be excited about Apple when you can go look to the other Magnificent Seven stocks and find double-digit growth that should continue for a while amid the AI wave, especially since those are often cheaper. Apple would be a lot more interesting if the multiple was lower, but what finally gets growth going again is the biggest question. Now, moving over to the private market, we have some further reporting on the rumored OpenAI deal. According to New York Times sources, OpenAI has raised $8.3 billion at a $300 billion valuation. The round was completed months ahead of schedule and was 5 times oversubscribed. ARR is not the $12 billion that was reported earlier this week, but in fact $13 billion. That's up from $10 billion in June and projected to surpass $20 billion by the end of year. Importantly, given how much conversation there is around Anthropic starting to eat their lunch in this area, the number of business users who pay for ChatGPT has jumped from 3 million a few months ago to 5 million now. Meanwhile, Anthropic's revenue number does seem to be $5 billion, and growing by my calculations at maybe more than $1 billion a month. Moving over to the geopolitical side of things, Chinese authorities have summoned Nvidia to discuss alleged security risks with their H20 chips. The investigations are beginning before the first shipments can even land following the US reversing their ban on H20 exports. Yesterday, the Cyberspace Administration of China called company representatives to discuss what they call serious security vulnerabilities. The CAC wrote, U.S. lawmakers have previously called for advanced chips exported from the U.S. to be equipped with location tracking features. The location tracking and remote shutdown capabilities on Nvidia computing chips are ready, according to U.S. AI exports. The regulator is demanding that Nvidia release documentation of this and explain the potential loopholes and backdoor capabilities of the H20. Now, the notice has some pretty obvious echoes to the Huawei ban of 2019. U.S. officials declared the company's networking equipment to be an unacceptable national security risk and placed Huawei on an import blacklist. And while there's good reason to believe their claims, the ban had the second-order effect of stopping the Chinese hardware giant in its tracks. It ensured Western competitors like Cisco and Juniper continued to have a place in the market. It's entirely possible that Chinese officials are attempting to do the same thing for Huawei in their domestic AI market. In the 6 or so months where H20 chips have been banned, Huawei have made large investments in building their own competitive chips. In fact, a large part of the rationale for unbanning the H20s was to ensure that Huawei can't establish a foothold in their domestic market due to a lack of competition. Forrester analyst Charlie Dye said, the CAC's scrutiny over H20 security risks could further erode Nvidia's Chinese market share and rising domestic competition. It also aligns with China's broader push to accelerate domestic semiconductor alternatives for technological self-reliance amid U.S. export controls. Nvidia, for its part, denied the allegations, saying, cybersecurity is critically important to us. Nvidia does not have backdoors in our chips that would give anyone a remote way to access or control them. Lastly today, a new user milestone. GitHub Copilot has crossed 20 million users. Microsoft CEO Satya Nadella slipped the comment into Wednesday night's earnings call, although it wasn't immediately clear whether this was weekly or monthly active users or some other metric at the time. TechCrunch has now confirmed that Nadella was quoting for all-time users. And while obviously a recurring number would give a better picture of what current usage is actually like, it's still pretty impressive for Microsoft. It means that 5 million users have tried out GitHub Copilot for the first time over the past 3 months, which is a very big ramp-up. By way of comparison, although we haven't heard from Cursor for a while, back in March they had 1 million daily active users. We can only assume that a lot of these GitHub Copilot users aren't coming back day after day, but the number still demonstrates just how much of a distribution advantage Microsoft has over its startup rivals. For now, though, that is going to do it for today's AI Daily Brief Headlines edition. Next up, the main episode.